Good evening, everyone. I am going to try to do this analysis as quickly as possible, but there's quite a few things that I need to go over, and I'm going to try to make it as simple as possible. So this is the S&P futures, and what's going on in the evening hours before tomorrow Monday is that we're gapping down in the futures. This is the daily chart, by the way, and I have been showing you this bearish rising wedge right here. Let me go ahead and zoom in. Actually, before we do that, let's go back over here. I wanted to show you the bearish divergence that we've had on the MACD, meaning that even though the price has been going up, we've been making lower highs on the MACD, on the moving averages. Also, we had this bearish turn right here on this right here, where the red goes above the blue, and that's a bearish signal, but it is on the daily. So this move down is going to be pretty crazy. I don't want to say crazy, but it's going to be very fast and very hard. But it's only going to be on the short term. Okay, so what we have here is we broke down from this rising wedge. We had a little bit of a support, and then we bounced around, and all we did was more or less a kind of like a flag, a bull flag. I'm sorry, a bearish flag, that goes a little bit like this. And once we got to the top of the flag, we just waterfalled, and right here at the top, or this is when Apple, I believe this day right here on the 25th, was, well, actually it was the 24th, I remember, yes, the 24th, when Apple started reporting. The reporting came out and was unbelievable numbers, and Apple gapped up like some crazy, like 25 points overnight. But anyways, that didn't matter, because once we got to the top of this bearish flag, all we did is just waterfall. Now let me go ahead and take that out, because what we have here is now a left shoulder, we have a right shoulder, and finally we have a head right over here. And if you guys don't know what I'm trying to say, is head and shoulder stop. Okay, what does that do? Okay, on the head and shoulder stop, pretty much which we broke overnight, we gapped down on the neckline. This is called the neckline right here. What we do is we take from the top of the head to the neckline, measure that out, and we move that to where we broke down from, which is right there, which I just did. I did before. Okay, and that will be our target. Okay, let's see what target, where is that gonna be at on the weekly. On the weekly, that happens to be around the 50-day moving average for the weekly. So I do see that going to that. Also, if we do a Fibonacci retracement, if I can speak, that's also going to take us around the 38% retracement. So that's what's called confluence, when there's two or three different targets or indicators that the same target hit in the same place. So I do see us getting there, and it's going to be very, very fast. We may have a Monday or Tuesday. We may have a little bounce. I don't see that happening Monday, but um, maybe so, because we do have that 23% retracement right there. We may bounce right off of that, but nonetheless, um, we we may have a little bounce, check, back test the neckline, and then continue our waterfall. Okay, another thing that I wanted to show you was on the SPYs. That was the futures. On the SPYs, this is the daily chart, which kind of coincides the same thing with the what's going on in the futures S&P futures. But I wanted to point out that we had a little bit of a more or less a double top on the daily. That's very, very bearish, especially when you see the massive negative divergence you have right here, and the breakdown was a complete expansion of volume, which means that it's you have plenty of distribution. And also, let's go ahead and look at the Qs, because Friday was, let me see, yeah, right here, I think, yeah, that's February. If you see right here, this line, this volume bar, that's, and this one from Friday was the second largest volume bar for the year on the Qs. That is very much a telling what's going to happen, what's going to continue to happen, which is more selling. So right now the sell may and go away. It's in full force, like I had I posted that before. I think I posted that on Friday. I was talking about that on my Twitter friends. Also, the same thing is happening with the Russell 2000. The Russell 2000 was the first one to break down, and like you can see, you have again negative divergence on the MACD moving averages. Also, you had a complete plunge of the moving averages for the stochastic. And now look what's going on. You have a this right here. When this happens, when you have a cross of the a bearish cross above the 75 line, or the 25, or below the 25 line, that means that the move is going to be very, very drastic, very fast. If you can see right here, when this bullish cross, this had said this was because this happened because of this move right here, which in 4 or 5 days, the move was tremendous. I mean, the gains, in 4 days you had a move of let's see, of almost 100 points. Let's see. Let me just let's see. That's 20, 40 or 50 points, which still, that's quite a move for the Russell 2000 for the small caps. So now when you have on the opposite side, when you have a bearish cross of the red and the blue, then you're gonna continue seeing some more rapid selling, very fast selling. So last thing that I wanted to show you was the dollar. The dollar, this is the daily chart. This is the futures of dollar index. The dollar has been consolidating and found support, and now it's broken out of this bullish symmetrical triangle, because more or less what it did was it came from the bottom. You had to move up, then consolidating sideways, consolidation, and now it's breaking out of this symmetrical triangle. So that's going to be a this is going to be also it's going to hit the commodities, which in return will affect the markets overall. So see the dollar going to higher prices. Let's do this. Let's just go ahead and see what our target for the dollar should be. So let's do this real quick. That's going to be your breakout. Oh, look at that. So more or less to that downtrend line that I've drawn from very long time ago. I believe it's quite a few years back. So we're gonna have to see what happens when we get there, and how the technicals are looking, how everything else is looking. But yes, from back in 2002, this downtrend, and looks like we're gonna be breaking out of the symmetrical triangle, and our target will be that downtrend line. So nonetheless, I'll be watching the markets this week, although I'm gonna be offline for a couple of days because I'm going under the knife. But I should still be able to keep an eye, or have an eye on the markets, and I'll try to tweet anything that I see that it may give you a new indication of what the market is going to do as far as direction. But okay, that's it. Thank you for listening. This is directionalanalysis.com.